Hi, everyone. This is Chris Kimble, and welcome to another edition of your Daily Five. And I just wanted to wish you, first off, a happy Thanksgiving and hope all of you have a blessed holiday season. Here are some of our past Fed presidents. We all know the interest rates have went up a lot, but I want to discuss, are they actually leaders or followers? We're going to re-look at the two-year Fed funds high correlation. What three indicators could switch for the stock bulls? Would really like to see these go. We're going to share several bullish ascending triangles, which is my favorite bullish pattern. Pepsi looks to be breaking out. Monster Inc.'s doing the same, and this measured move is suggesting 100% breakout. So we'll go ahead and get to it. But this is a chart that I want you. It's kind of busy, folks, but the candlesticks are two-year yields, and this copperish or gold color is Fed funds rates. And so what I want to share is, number one, you see this high correlation. They just follow each other, but almost every time you can see here that two-year yields started heading down before Fed funds. They started heading up before Fed funds, down before, up before, down before. So it's over and over, folks. And this is a 30-year time period. So now what I want to point out is, these interest rate hikes that have happened, they're just following the two-year yield. But why might the two-year yield be important, as it's the most overbought or reaching one of its highest relative strength overbought readings since the mid-1980s, since Reagan was in office? So why I think this is important is, let's just take all the noise away. Let's use a great StockCharts chart here and look at the two-year yields. And this is on a monthly basis. There's 2006 and 7. Here's this huge run up. So it's now testing old support as new resistance here. And we all know we're before the end of November. So there's a chance that this could put in a doji star reversal at resistance. And so this could become so important because we all know the 60-40 portfolios suffered the worst year since dirt was made, and part of it is the advent of sharply rising rates. So I wanted to kind of focus on this and look at the two-year more than the darn Fed funds meetings. So one of the things I said earlier that we'd like to see, the bulls would like to see a couple of these breakouts take place. Here's the S&P on top, advanced decline line in the middle, and what do we got? PIMCO high yield fund on the bottom. And this is PHDAX, and all three are making lower highs. And so we've got a real problem, here that this isn't bullish, but there's a chance that what do we have? Maybe double bottoms, and it wouldn't take much to break out. So I know many people are discussing the 200-day moving average, and we're close to pushing above there. But these would be really good news if we could get upside breakouts. So I want to talk about some stocks, and my favorite pattern is the bullish ascending triangle, and discuss what opportunities might be here. So this is Pepsi, and the thing I just kind of want to notice is, here's the beginning of the year, and Pepsi was around 172, a share, but where's, the S&P's down 20% on the year or so, tech's down 30, and lo and behold, Pepsi is actually, as we speak, hitting new highs for the year. So this is a really positive pattern in an ugly marketplace, being 2022. You can see in the calendar year, there's been three consecutive higher lows, and now we're looking at higher highs and a breakout taking place here. So here's a stock that's doing well. If you kind of lift up the hood, we're hearing different things that they have the ability to adjust their chip prices real quickly. And I'm not talking semiconductor chips, we're talking Doritos and all those other things. They're actually able to adjust those, and Americans continue, it seems like, to keep buying them. So here's a nice bullish pattern, that we like. Another one that if the read is correct, that I'd like even more, this is a Monster Beverage. So here's another beverage company with potentially, could this be an inverse bullish head and shoulders? And even if this is totally incorrect, everyone, we all know that this line in the sand around $98, $99 has been a big resistance level. And so Monster Inc. is attempting to push above here. If this would happen to be an inverse head and shoulders, the distance essentially from a measured move perspective, from 100 down to 70, if this would be correct, the measured moves suggesting that Monster Inc. could be testing the 130 level in a period of time down the road. So Pepsi and Monster Inc., we can see in the beverage industry, have really relative strength and actual bullish breakouts taking place. Now, if we want to go to the other side, this is a chart of Hong Kong, and Hong Kong has kind of been a leader to the downside because it peaked in 2018-19. America had COVID and had a sharp decline and a rally back, but the Hang Seng's been the opposite. It's been creating lower highs and lower lows for several years. And actually, the decline from almost 31,000 down to 15,000, so there's a 50% haircut just this year alone, has it testing some prior lows, and it's almost down to the financial crisis lows. So obviously the trend is down, and there's the potential of catching a falling knife here. Could be dangerous, but a stock I want to discuss that has really gotten pounded is PDD, which is similar to an Alibaba out of Shanghai or an Amazon in the States. PDD is out of Shanghai, so it is a Chinese stock, so no surprise that it's gotten hit. But it's gotten hit really bad. So it was at 210 a share, went all the way down to 20. And obviously this year it's went from a low of 20 to 60 almost. And I know it's a big gain, everyone, but the thing that interests me greatly is that if this is a bullish ascending triangle pattern, the measured move is suggesting that PDD makes it back to its old highs. And obviously there's a lot of distance between current and old highs. It's kind of neat. There's this is some unfilled gaps up here, but even if made it to this resistance zone of 130, that's obviously a mathematical, a really large gain already. So, and kind of just trying to wrap up, this is as we go into next year, will be my 43rd year in the business, and I've been blessed or lucky or unlucky to see interest rates at a high with Volcker, and then them obviously be pushed down to zero. But I can't reiterate enough, why you want to keep a focus on the 2-year yield. And if, as we said earlier, 2-year yields are testing 2007 highs on a monthly basis, they could be making a monthly reversal pattern. If they do, that could really be positive news for the entire 60/40 portfolio that, as we've said, has almost the worst year since dirt was made. So I'd suggest keep more of a focus on price and on these patterns in the 2-year yield than I would of the announcement of what the Fed's doing, because I truly feel over time that the bond market's the dog and the Fed's the tail, and the 2 years just wagging the Fed. So we went over that the AD line, S&P, and junk bonds, if they would break out, that'd be really bullish. There's some nice ascending triangles. Pepsi and Monster Inc. are looking positive, and this measured move in PDD, if it would break out, could really be a strong one. So again, I want to wish everybody a happy Thanksgiving, happy holidays, and for you StockCharts, if you'd like to check out our research, you can get it at a sizable discount by going to kimblechartingsolutions.com/StockCharts. Thank you, everyone. Wishing you all the best. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.